Greetings, everyone. It is Uncle Vigilante, and I don't even know what today it is. I think it's Tuesday. Yeah, it's Tuesday. It's noon. This is an emergency broadcast. Greetings, everyone. Hold on. It is Uncle Vigilante, and I don't even know what today it is. I think it's Tuesday. Let's just turn that. Oh, Max Riemann, welcome to the show. Maybe you can get us back on the rails. But hey, do I sound better? Guess what? You know, last week, at the beginning of the week, my Tascam system that connects my microphone, makes me sound all good and stuff. It just shit the bed. And so I called them and I'm like, hey, all I did was upgraded my computer to the new Monterey, my Mac. And he's like, oops, sorry, pal. We haven't updated our software, but you can order the more expensive version. And so I did, and I got it in, and I got it all worked on it all weekend to get it all set up, and I never could get it to work. So I was so pissed off. I decided to do one last move. I hit Control-Alt-Delete, rebooted my computer. I felt better because of that, just something satisfying about rebooting that damn computer. And I hooked it all up, wanting there to be some audio magic. Couldn't hear myself, wasn't working. So I decided to do one last thing. And I'm like, what if before I throw all this out the window, what if I just plug in my old system and see if it works? And it does. I don't know how, but I'm not complaining. So I sent the expensive one back, and I couldn't be happier. Max Freeman, you reached out to me this morning and said that you wanted to have a live stream to talk to us about EMPL and SDRs and Lord knows what other acronyms that I don't understand right now. So I'm going to hand this over to you so that this show is yours, so that you can educate us. And by the end of it, hopefully we're all a lot smarter, because I think this is going to be very important. Hello, folks who are coming in the chat. Cheers. Okay, Max.
All right, let me figure out how to screen share here.
All right.
And let's watch the clock, because I have a hard stop at about 5 to the hour. I probably should bounce maybe a little bit before.
Easy.
But so I want to talk about inflation. It appears that life is getting very expensive all of a sudden, but that is an optical illusion, because what is happening is that the number of currency units in circulation, it has exploded. And so for every good or service out there, there's an increasing amount of currency chasing that. And the prices of everything are going up. And so that's a real problem if you're living on a fixed income and you don't have exposure to asset price inflation or any way to directly benefit from what's going on. So there's a massive wealth transfer. This is the specific mechanism of you will own nothing and be happy that they talk about a lot. So the United States just ticked over into literal hyperinflation, or I should say the inflation rate of the United States exceeds the definition threshold of the International Accounting Standards Board, which is 100% increase in the money supply over the past 3 years, or a 25.9% annual rate. I think the US just printed greater than that at maybe 26.0, something like that. And it's actually accelerating. So this number is going to explode. That they're going to have to stop publishing this at some point, because or else that it would be apparent to all what's going on. And so, as we've seen in countries like China, the numbers are kind of more of a political theater exercise rather than any type of actual measurement. But regardless, there's enormous quantities of currency being created. I believe the statistic is that 80% of all currency in existence was created in the past 2 years, something like that.
So, I mean, if you just take a look at this, if I have this right, you're talking about this is our debt, right? Is this the national debt that
No, the national debt is a whole different ball
Okay.
of wax.
This is just the
So
printing of money.
well, this is one measurement of the currency supply. So you have M0, M1, M2, M3. We talk about Exter's pyramid a lot, and how a finite quantity of gold fans out through the banking system and the various financialization vectors that are out there. It gets really complicated. So nobody really knows how much money is out there, or currency rather, but the point is it's increasing, and the rate at which it's increasing is also increasing. And if you look back into certain times in history, the Weimar era in Germany, back in, I think it was 1923, I might be wrong on that, but I think that's when it was. Or I think it was 1950s Hungary, more recently Venezuela, Zimbabwe. Currently Turkey is in a bad way with inflation. People are looking for an alternative. So the US dollar is the cleanest dirty shirt in the laundry, but that doesn't mean it's necessarily going to be that way forever. And so in thinking about this, what we recognized was the need that we all have, not just what we're trying to do here in Epicenter, but more broadly, there's a lot of people with freshly printed fiat currency that they have in excess and they don't know what to do with it. And they would love to be able to have an off-ramp out of a failing system and get some diversification. So if each individual currency is highly at risk due to the political situation of that individual country, what you really need is an instrument that tracks the entirety of every fiat currency that exists. And luckily we have one. The IMF SDR is the International Monetary Fund. This is kind of the central bank of central banks, Bank of International Settlements, World Bank, all of these sort of like one world government type of organizations plug in here, and they have this accounting device on their books called the special drawing rights. That is a weighted basket of all of the world's fiat currencies, about 200 of them. And because it represents all of them, it's really, really stable. So look at this. It's only been as low as 124 and as high as 163 in the past 20 years. So everything's going to hell in a handbasket in every financial market on the planet. And I think that this is highly likely to remain around 1.4 2 years from now, 3 years from now, 5 years from now. I mean, it's a political consensus that takes 200 countries to modify, and that doesn't happen overnight. And so we've found an oasis of stability in this very obscure instrument. And so what we do to create inflation protection products for people that have excess fiat and want to get into crypto, this is something that's been in development a long time. The picture of the guy on the right is F.A. Hayek, who was a legendary economist. And he came up with this idea of an elastic currency that rebases, or the number of units in a person's wallet goes up or down. So it's a little bit difficult to understand, but essentially when EMPL is trading above the peg, which is currently 139, the protocol mints more, and let's say it's 10% above, then as a user, when it rebases, you would have 10% more tokens. And then conversely, if it's below the peg, that actually shrinks the number of tokens in your wallet. And that's no good. Nobody likes that. It's a design flaw from the perspective of certain individual holders, but it's an amazing thing in terms of being able to attain a volatility profile relative to everything else in not just the crypto market, but in the world. If you add a little bit of this asset to your portfolio, you can reduce the Sharpe ratio, which is a measure of volatility. If you ask yourself, if you're a fund manager, would you rather have 13% return or 14% return? On the surface, I'll take 14% every day, but would you take 10 times the risk for that extra point? No, because over the course of a couple market cycles, you're going to blow up. And so sophisticated investors know to look at not just the returns, but also the way that they achieve those returns. And so having a bit of EMPL in your portfolio provides a counterbalance to the volatility of the other assets, because the way it responds to the market is driven by different forces. And we're using it in a very particular way where essentially it can provide inflation protection over time, because there's a buyback component where fee income from the usage of the system accrues to the benefit of EMPL holders, and there's constant buy pressure and burning the supply to take it off the market. So it's not just an inflation hedge, it's an inflation hedge with yield. And then the other thing that is really interesting about this, we haven't really talked a lot about them yet, but another core partner of ours is Gram Chain, which has a technology that enables a link into physical precious metals. They're reliant on Ethereum right now, but there's various interconnectivity options that can be done. And so plugging into one of the leading, if not the leading, precious metals organizations in the world.
Lost you. Somebody's calling Max.
With 2,000, don't do that when I'm live streaming, people. With 2,000 retail distribution points and the ability to do allocated storage in at least Singapore to start, but probably some other countries that I'll decline to mention at this particular point. If you're familiar with the precious metals industry, you can imagine what they are. And so essentially, let's say you were lucky enough to be on the receiving end of $100 million in freshly printed currency. Well, wouldn't it be great to be able to get that out into crypto in the broad sense, into a crypto you trust in the specific sense, and one that you can offer into physical precious metals down the line with people you can trust in an era where very little is certain about our financial lives, because we don't know how many currency units there are going to be. We don't know what interest rates are going to be, what the central banks are going to do to us and our businesses. We can find certainty in the future and stability in relying through crypto on the ultimate form of money, which is precious metals. So it's really a unique product. I think the ultimate market appetite could be well into the trillions, because the market cap of gold itself is 10 trillion, and Bitcoin Core has attained a 1 trillion market cap, with the valuable feature of the price trending up over time, but also the flaw, the fact that it's not stable, which means you can't use it for different things. And so Epic sharing the design of Bitcoin Core in terms of the 21 million and the emission means that it can also be expected, we think, to fly on the same path, because the wings are the same and the thrusters are the same and all that stuff. We've got 6 years to catch up with Bitcoin Core and eventually hopefully surpass it. But that's a design problem if you want to do contracts where you need a stable unit of account. That's not going to change. So there's a leasing company that is using EMPL to provide crypto-backed real estate and other hard asset lending, and they couldn't do that with just EUSD. Like, you need another asset to hedge out to. And so this is a great example of one of those things that's on the subway map, the Epicenter Crypto Compute Cloud document that we've shared a little bit of. It's easy to overlook. It's small. We don't talk about it a lot. It's easy to overlook it, but really it's pretty central, because the way that automated market makers and continuous liquidity pools work is that if you get them to a sufficient size, then the tiny little rounding errors and edge cases and there's something wonky on this chain over here, that becomes any weak spot becomes exploitable, like the wormhole type of thing. And so the chains need to be knitted together in a very, very careful way, that you have to think about the trillions when before you even launch, because most of the innovative DeFi stuff has hiccups if it doesn't, on its way to success, if it doesn't blow up and die completely, which is most of them. And so this is another example of our exercising of caution in trying to preserve our users' trust and their ability to ultimately, we don't ask people to trust us, but by the trustless design and the fact that it's pure autonomous free software. But over time, like if you've been to the same restaurant 25 times and they always take care of you, you kind of just form an expectation that that's the way things go there. And so this particular technology, the idea of Hayek money was first implemented in a project called Ampleforth. So a bit of our air grab is going to be in recognition of their contribution to our success and doing some ECR for AMPL holders and Forth token holders. So more on that later. So tip of the hat to the people that came before, and their particular implementation has never been compromised. It's stable. It has handled, it started out at 50 million market cap. It sold out in 6 seconds back in July 2019, I think it was. And at one point it's handled as much as 500 million in market cap, just based on providing that little bit of counterweight to the volatility profiles of fund managers' holdings on Ethereum. I mean, if you need that 500 million worth, I think it might be 200 now, but that's a lot of demand just because the rest of the crypto space has gotten so big. And so to be able to generalize the Ampleforth idea and apply it in an innovative way across all these chains. In a future reveal, we'll go through the design of the different subnets of EON and how EMPL ties those together to enable people to trade in a particular type of way based on atomic swap.
So Max, all right, now talk to me like I'm in 5th grade here. Okay, so I get Epic Cash, I get ECR, I get EUSD. I know where to go buy them. Is EMPL already a product that can be acquired?
No.
Okay, so
well, it not on the open market, but if anyone who is listening is a fund manager that would want to put some capital to work, there is an opportunity for what's known as a SAFT, a simple agreement for future tokens. In this particular case, it does not expose us to any risk to allow outside parties to come into our world and help throw fuel on the fire by attaining an advantageous allocation of these. So we're promising, yeah.
So this is one where you're giving a little peek into the future, and we're doing this live stream. So in one place, you'll be able to direct some people to be able to watch this live stream. And these are people who I presume would be way smarter than me, who would understand this. They'd be able to speak this language and they'd be able to see the value in it. And these are people likely that have millions and millions of green cash sitting on the sidelines that they like to put to work.
Yep.
So they would invest in this, and then what is their return back?
So if somebody buys today, whatever the particulars of the pricing, when the tokens come out, which we're promising December 1st, but it really should be faster than that. So you buy today, and then you get liquid tokens that you can sell as of December 1st. So that's basically it. We're gonna ship it as fast as we can, and then when the network launches, you get out of cash and into crypto, and whatever ROI profile is baked in there is also, of course, a reason to do it. So this is our very first departure from the no ICO, no VCs, no monetization model, because the appetite for this type of product is so enormous that it makes sense to hook on to that to accelerate the ecosystem development. Despite the regulatory uncertainties, because this is a sophisticated product only for professional institutional investors or accredited high net worth sophisticated people, it doesn't cross any gray zones or red lines or anything with respect to securities law, and that's very important. So this one enables us to avail ourselves of an accelerant, which is access to capital, and there's some other pieces of the puzzle that will round out that story. If anyone is interested, ping me on Telegram at Max Riemann 4, and we can execute an NDA and open the kimono about what all good stuff we're doing. Essentially, the long and short of it is we think that after what is it, 3+ years in my own case, and 2+ years since launching the
scroll up a little bit. It just looks wonky.
All right.
So that we can see that beautiful logo. There we go. Thank you.
And yeah. So we are creating seats at our table for people that fit this profile, that have surplus capital and can bring more than just that capital, but every dollar spends the same, I mean, pretty much, but some funding comes with different benefits, opening up Rolodexes or key relationships or advocacy or direct participation. This is a product that there's 1,000 digital asset hedge funds out there specifically. There's hundreds of family offices that are also involved in crypto, and 51% of global macro investors are actively deploying into crypto and have been ever since I heard that stat. I think it was Q2 of 2021. So we've really reached the tipping point. It's not the beginning of the end and the sky is falling and we're all going to die. No, this is the end of the beginning, and now the stage is set for crypto to go from 2 trillion to 10 trillion. And solving the volatility problem, solving for regulatory compliance, solving for compatibility with all these different components of what we need to do to really realize our vision. It's exciting to be able to talk about this finally.
Isn't the volatility problem, Max, already solved because BTC has Tether?
Well, first of all, Tether is only a dollar instrument. So you can't hedge out dollar risk with it. But the other thing is it is not censorship resistant. So it relies on trust, and it is ultimately very fallible. And so that's it's fine for today. And until that one day when it's not, it will be great.
Right.
And then when that day happens, it will be a very bad day for many people, and our ecosystem will have the most giant green candle anyone has ever seen, because finally the value of, oh wow, censorship resistance really matters. It doesn't matter till it does, and then then it really does.
So just like with Epic Cash, our properties, so we have 21 million coins. It's censorship resistant. That's where I first learned what that meant. Confiscation resistant. So I presume this would be confiscation resistant as well. It's decentralized, it says there. Permissionless is another one of Epic Cash's properties. And surveillance resistant and trustless. Yes.
No, not surveillance resistant, because it uses a transparent ledger. So everything that you're doing on this can be observed by others.
Okay, so this can be observed, and but yet we're not declared a security because there's no ICO, no pre-mined, and it's 100% decentralized. Do I have that right?
Yeah. So actually we should update this. The governance is provided by the community of ECR token holders.
Okay.
So in the case of the XRP network, as an example, Ripple, there's a company called Ripple that operates the network. And if anything were to happen to them, then the network would have a challenge, or it would arguably
Mhm.
cease to exist. And so it represents a risk point for people that are using that does not exist here. So we feel very comfortable that we've hit all the key design parameters on
Okay.
this. And in this particular case, the observability is actually a feature rather than a bug, because anyone who wants confidentiality knows how to get it, because after all, Epic exists, and this is a way of linking Epic to different blockchains. So this is transparency and auditability, or external observability, public auditability of all transactions, not just their own, but opt into confidentiality. So this product can get into different niches that a fundamentally confidential base layer protocol could not, if that makes sense.
Okay, so we're doing this live stream. There's going to be people ultimately who's going to come watch it. You said what it is in the little box. Now, how does it work? To me, this is just goes right over my head. Protocol owned liquidity provided to Conver, Curve, etc. Can you unpack that just a little bit for me, please?
Yeah, so essentially there's this idea of protocol controlled value or protocol owned liquidity. These assets generate their own funding, and it goes into a bucket that is used to support the further growth of the asset. Olympus is a great one that was really an early leader in this. And so the activity of the users generates value. That value accumulates, and that value is put out, essentially renting its liquidity out to marketplaces where people are looking for decentralized leverage. Convex and Curve are names that are involved in that type of thing. There's a whole bunch of different iterations on that same concept across the different chains,
So
ecosystems.
Convex and Curve would be good breadcrumbs for those of us who would be interested in a deeper dive. We could go and just research Convex and Curve to try to get a better understanding. Okay, cool. Now, these income streams fund ongoing buyback and burn events. I get that. The protocol accumulates physical gold then. So that is an absolute that's what it's designed to do.
Yes.
But I don't understand then, why isn't it soft pegged to gold? Why is it soft pegged to one SDR?
Well, we need a gold pegged instrument in time, but remember, the world already has 3 of those. The best one is CGT, Cash Gold Token. That's the partner Gram chain. So we don't need to reinvent the wheel. There's Pax Gold, Tether Gold, CGT, and maybe one other, but like the 4th product in the market doesn't really move the needle. The SDR is unique, and the elastic rebase is unique. The way that those gold linked product works, or gold linked products work, is that they have a company that manages the hedging operations through direct market making, and that works as far as it goes.
Can you just back the bus up? I'm going to sound so dumb, but what is a hedging operation? What is a hedge fund? Unpack hedge for me. Sorry, I'm an idiot.
Right. So let's say you are Coca-Cola and you're an American corporation that maintains its books and reports to investors in dollars, and you have a subsidiary in Japan. Now you're taking in revenue in yen, but you want dollars, and so maybe to make sure your books balance and you end up in a profit rather than a loss, you would sell your future yen revenue for dollars, a forward swap contract that protects you against adverse currency rate risk that you don't want. So let's say that exchange rate of the yen goes crazy and you didn't hedge, it might ruin your not just your quarter, but bankrupt your company. Yeah.
So if you just take a look at a volatility, something we're all familiar with, Bitcoin, at one point went to 20 and then came back down to 3,000, and we know where it's gone since then. So that's this volatility, right? So one could imagine, if you can create any analogy to that, Max, to where by soft pegging via elastic rebase to one SDR, if you can put that back up on the screen.
Yeah, just give me 1 second because I'm gonna find
Okay.
a chart here, an oil chart. Give me 1 second.
Oh yeah, oil could be a better one, but so hedge. When we hear people hedging their risk, there needs to be an instrument to allow someone to hedge their risk, right? So EMPL becomes, we hope our vision is the most stable.
A stable chain. We're building a stable chain that relies on different components that are themselves volatile in certain kind of ways, where it harmonizes out the vibrations like a sine wave. So we're gonna have coalescent stability out of the volatility of the different chains.
Okay, so EMPL is a blockchain. Lesson number one, right? Okay.
Yes.
I'm getting there. Okay, so it is a new blockchain. It doesn't have anything to do with Epic Cash, right?
Not directly and not out of the box, but in time, it serves a cross-chain link between Epic and other parts of our ecosystem.
Okay.
So as we've seen, some people want to use Vite, some people want to use Stellar, some people want to use Ethereum and Binance Smart Chain and this and that. And the more ways that we can support for app developers to build innovative services, Poolboy is working on a tip bot that connects into Vite as an example. So like if you appreciate a meme on Twitter, okay, great, bang somebody some coins or some tokens. All that type of stuff can be done if you have the requisite capabilities. And so the more primitives that we build into our stack, the more that unlocks in terms of truly unique and innovative products that people can build. We're building money Legos.
Okay, no, this is fascinating. This is fascinating, and yet again, it's like what I really appreciate and respect about you, Max, is that you play long ball and you're thinking about you're thinking in trillions, not millions, and
per coin, or no, I'm just kidding. nobody can imagine that yet.
Yeah, good point. But okay, what are we looking at here?
Yeah, so this is oil over the decades, and so oil is, if you're an airline, as an example, you need to know that your cost of operation is not going to go crazy. Like, so let's say, what are we, 2022? If you go back to 2012, oil started at $60 a barrel, 65, ended at 65, but it went down to 20. And before, not too long before that, it got up to 160. So depending on how sensitive your business is to fuel prices, you could be out of business. And so many companies over the course of history have blown up, including even banks. I mean, hedge fund people talk about the Greeks and the different mathematical ratios of the correlation of these things. It gets really complicated, even for experts, perhaps especially for experts. And so the designs that we're bringing into the world here are really informed by not just what we've seen in the past 12 years of crypto, but really over the past 100 years of the history of money and markets, and trying to say what all can we do with the technology as it exists today.
So Ryan Kaminsky said EMPL rubber money. Does that make sense to you?
I like that.
It kind of it kind of connected with me. It caught my eye anyway. So that helps with the stability, right? So really what we're trying to do is take what you just saw with oil and hedge out some of the volatile risk. Yes.
Well, so let's say you wanted to have an oil futures contract. You could denominate that in EMPL, knowing that it's not going to change on you, right?
Okay.
Because the dollar price of oil is highly sensitive to political forces. Is that different than the renminbi price of oil, the ruble price of oil,
right.
the middle of the night briefcase of cash in the Strait of Hormuz price of oil? We need an unchanging yardstick, and EMPL, despite its rubberiness for the individual wallet balance, which you need to think about the percentage of the network you own, not the number of tokens. It's a little bit of a different lens to view it through, but essentially a massive amount of use cases become unlocked for Epic through EMPL, because you can use Epic as the settlement layer, and EMPL is kind of like that shock absorber where you can get exposure to the risk you want and lay off the risk you don't, and never give up the interoperability, the composability, the trustlessness, permissionlessness, centralization resistance, all that good stuff.
Okay, I think I'm starting to get this. Okay, so this really solves a lot of problems.
Sexy stuff.
Okay, but now I want to focus on hedge currency risk: physical commodities, precious metals, real estate, insurance and derivatives, fixed income products. What does all that mean? And how does EMPL help?
Okay, so physical commodities, let's say you're doing oil tanker shipments, and you're going from one obscure fiat currency that is highly volatile to another obscure fiat currency that's highly volatile. The petrodollar has been a defining factor in international commerce because money is a network effects phenomenon, and it's easier to be in the biggest one. And so there's 200 fiat currencies out there that are all going through various sorts of stress. And once people understand that they can, there's another option, not having to use the dollar when you want to go from the Botswana Pula to the Zambian, I think it might be Kwacha, I don't remember, but it's like two countries on the map that adjoin each other. You would think they would use the common fiat currency, but no, they don't. It's usually physical dollars, or maybe euros in the European regions, and it's this weird, antiquated holdover, and we can do better. So I don't know what the appetite for this is going to be over whatever type of time frame, but I think it really solves a lot of problems, and it's one of those nuanced but key components that unlocks a lot of different opportunities for us. So physical commodities means things like oil, timber, agricultural products.
So if I trade in timber, and let's just say I'm in Brazil, whatever their money is down there.
The real.
Okay, the real, and somebody's buying it with US dollars. What this allows us to do is create a contract that is based in EMPL.
Correct.
And everything level sets to that optimal 1 SDR, which is $1.39, and that is determined by that central bank of central banks for the world that you referenced at the beginning. So the SDR is a thing, and we're just pegging to that, and we are with our blockchain to keep everything as close to that 139 as possible. We are either going to burn or buy somehow. Magically, that'll happen. Will
So
burn.
there's mint, when it's above the peg and the supply needs to grow, it will mint tokens. And
Okay.
if you have a 1% share, then you get 1% of the tokens. So
Ah,
it's proportional and pro rata. Now that I think of it, maybe we'll tweak that slightly. I reserve the right to put an asterisk on that now that I think of it, but directionally, certainly very close to that. So it needs to grow by 10%. So the supply grows by 10%. If you hold 1% of the network, then you would get 10 basis points of that overall increase. And if it needs to shrink, then it doesn't actually burn them. What it does is the wallet balance of each user, every wallet that holds tokens, when it's a negative rebase, they all lose tokens. So let's say you had 1,000 tokens and it needs to shrink by 10%. Well, now you have 900 tokens.
so that'll just automatically happen in your
It happens just,
EMPL.
imagine a global update, everybody's wallets get zapped for 10%. Yeah.
Okay.
And of course, people, arbitrageurs anticipate that and go and trade against that and maybe want to get ahead of it. And so there's an interesting game theoretical aspect there, and being able to use incentives to also
Who is your
bring.
who is your prospect then? Right now, who are you speaking to? I mean, it certainly isn't me. I'm an Epic Cash guy. I get that. I understand that. I love me some Epic Cash. But who are you talking to?
There's 1,000 digital asset hedge fund managers.
Okay.
And there's a few thousand not venture funds specifically, but let's say global macro hedge funds.
Mhm.
Anybody that's involved in trading currencies, if you know your way around the CME and care about things like the price of Brent versus West Texas Intermediate, then this might be worth a look.
Okay, Max,
really, yeah.
What then would be like an expected investment level for a product like this? Like, would you be looking for somebody coming in saying, "Hey, I have $500 I could throw at this." 500
Well,
million.
I mean, as we get closer to release, absolutely, we will give the community the bites at the apple on the retail level. But now you're talking about mass scale securities distribution and lawyers and registrations. And is it a Reg A or Reg D, this or that? I mean, it gets really, really complicated, and it's not just software. It's more about accounting issues for lawyers and people billing $800 an hour.
If it's decentralized, no ICO, no pre-mine to fund, how on earth do you afford those attorneys and those accountants and those people that have to regulate this?
Well, so for sophisticated investors that are able to buy a SAFT, I would say at this point, like there's definitely an availability to handle into the billions, but the minimum that would make sense, let's say, is $1 million. I mean, just the paperwork required and the coordination and stuff like that. So I'd say that's a pretty hard threshold. Below that, it's not worth anybody's time. But the point is, this is a very elastic proposition that can handle the overflowing excess currency problem that people don't have any good alternatives of what to do with it. There's one outfit that I'm thinking of that has 9 billion and nothing to do with it. Another one has 5 billion, nothing to do with it. Another one, 200 million. There was 180 billion of money that was put into blind pools or SPACs, the blank check companies, I think they're called. Just here's some money, now go find something to do with it. And so the balance of or the imbalance of what is the limiting factor? Is it availability of capital, or is it availability of other scarce resources? Has long been in favor in this blockchain and cryptocurrency sector, with things like developer availability or the technology being there, or regulatory clarity, or community organization, things like our Meta DAO structure. So yeah, I mean, people that are managing, let's say, tens of millions to billions and beyond, might see the value in this, and there's an opportunity between now and when we launch it, to essentially carve out a seat at our table to help us fund a lot of the infrastructure building that we need to do, and come into the ecosystem in a chunky way that exposes them to some significant upside. Because as we accrue value, we have discretion as a community with the ECR token, which different buckets get rewarded for their presence. People that are able to bring large resources to bear and all the other attendant benefits that come with that, I think we can all agree deserve especially warm welcome.
Yes, agreed. Now it's 12:53, and I know you have a hard stop in 2 minutes, but I did want to reference Lydia in the chat. Thank you, Lydia. You always have my back. Smash that like button, people. Comment, but she made a comment that I like. If I understand correctly, wait, is that over on? Maybe that's over on. OVARON. Yeah, I'm sorry. I want to give proper credit. If I understand correctly, EMPL is about flatten the curve.
I don't know what specifically meant by that, but I would say it is most aptly described as an algorithmic unit of account. It's solving that unit of account need, store of value, medium of exchange, unit of account.
I think the flatten the curve, the way I interpreted that, is the volatility curve. It just flattens it out to where you don't have to wake up every time you check your phone, freak out.
Like that sounds like something those globe theory conspiracists might say. Careful with that.
That's right. That's right. Boy, people love that subject.
Shout out to Josephus Scaliger.
Whoever that is, shout out to you. All right. So shout out to F.A. Hayek. Didn't know who the dude was. I know that you really love the guy. And so I trust you, and whatever Hayek money is. So everybody come back on Friday. We're going to have a really great Epic Cash live on Friday, and we're going to talk about some important topics that I think everybody needs to hear. And
sorry to interrupt, but I'll just throw it out there. The original name of this was Epic or Epicenter Macro Prudential. That's a word that means like, what policy do you want to achieve in your economic system? And I will leave a hint for the eagle-eyed, attentive viewers. I know there's some of you out there that know who Scaliger is. If you do, ping me and we can compare notes on that particular rabbit hole. There's an Easter egg here. There's some additional data that is important, that's not apparent at first glance, and I'll leave it there.
Okay, I'll trust you. Guarantee I won't be the one figuring that Easter egg hunt out, but why? Because I don't know shit. Okay, everyone. Well, thank you very much. I got in trouble last Friday. Apparently, when I hit end, it pops up and it says "end meeting for all." So I think I have the issue. I always thought when I hit end, and then when it popped "end meeting for all," that second click was when it ended, but apparently it's ending on the first. So now that I know that, I will never do that again, ladies and gentlemen. All right. But you get what you pay for, right? You get what you pay for. Okay, everyone.
Community-driven volunteer effort.
Community-driven volunteer effort. Hey, down in the show notes always, there's a way to support Uncle V. I don't know if anyone ever has. A long time ago they did, but I don't promote it or ask for it or need it. Frankly, it's just it's in there. It doesn't even go to me. It goes to one of my kids. just because that's, that's what we do. We take care of our own, right? All right, everyone. Thank you, Max. Thank you. If you ever need to have another one of these where you need a dumb person to talk to, I'm your man. I'm happy to ask junior high questions. Sometimes that needed. Thank you, everyone in the chat. You guys are awesome. Really appreciate you. And we'll see you guys